Hi guys, welcome back to Finpact. Today I'm talking about how Bill Gates has bought this one particular stock. But you know what's crazy? He sold his Apple stock and Twitter stock to buy this stock. And ironically, at the same time that Bill Gates sold his Apple and Twitter stock, Cathie Wood from ARK Invest ended up buying the Twitter stock. So just a little funny coincidence. But let's actually look at what Bill Gates bought with this. He bought the Coupang stock. So guys, before we begin, make sure you smash that like button down below so that we can help push this video out. And if you haven't already subscribed, go there, hit that subscribe button right there. Do it. And I've also newly launched my Patreon, which I would love for you guys to be a part of. So on my Patreon, you get exclusive content, support from me directly. And one of the tiers even includes a phone call once a month with me. So definitely check that out. I've made it as affordable as possible. And you'll get to see what trades I make in real time, what investments, news, whatever I do for my own portfolio. So definitely check my Patreon out. It's linked in the bio below. And it's also going to be pinned in the comments. So yeah, I look forward to seeing you guys there. So the Gates Trust sold about 1 million shares in Apple, and for Twitter, they sold around 272,420 Twitter shares in the first quarter. Now, in the first quarter, Twitter stock rose by 17.5%. So they definitely sold the profits, and then it fell 14.4%. Now, that's when Cathie Wood from ARK Invest came in, and she bought over 1.3 million shares of Twitter amid the stock sell-off. So we were down 14.4%, and Cathie Wood bought in. So once the Bill Gates Trust sold these Apple and Twitter shares, they bought 5.7 million of Coupang shares in the first quarter, which actually showed fantastic earnings reports, which I will go through in a second. Now let's quickly go into what Coupang is. It's the largest online marketplace in South Korea. This is the website. This is the Coupang website. And, you know, you can see multiple products. It kind of reminds me a bit like AliExpress or Alibaba, that sort of vibe. And it's from an emerging market. So the potential in expanding is more in emerging markets. When the economy is booming, there's an increased growth in the middle class, and therefore more people spending, more jobs creation, more economic development potential than an already economically developed country like the UK or the US, that sort of thing. So the investment in a company like Coupang shows that it has a lot more room to run, a lot more potential to grow and expand because it's in an emerging market, and it has the largest presence there as well. So it does have that market dominance in South Korea. So the company only actually went public in March. So the potential of this e-commerce company must be really good if Bill Gates had sold Apple and Twitter to enter a newer and more risky new e-commerce company, because they only went public in March. So the shares are down 23% since March, which is when the IPO took place. Now I just want to explain that when an IPO happens during a market top, so let's say all the prices are rallying, crypto prices, stock market prices, when we're at a market top, people get so invested in just the excitement of a new company that they actually lose rationale and they just want to get in and buy the stock. But then what happens is when they do go in at that market top and they get in the IPO prices, many times people want to enter in the IPO price and then exit as soon as it gets listed so that they can make that profit. And then what ends up happening is that the share prices end up slumping. I mean, that's literally what happened in my previous IPO video that I did for Deliveroo. Before the IPO took place, I told my audience, listen, the market is at a top. I personally will not be buying. And I said the reasons, market top, favorable conditions because of the pandemic, it naturally did well, especially things like e-commerce. I mean, those sorts of companies did really well in the pandemic because they were offering things online without contact to people. So things like that. So I made sure that I warned everyone that's what happens. Anyway, that was a bit of a side note. I just want to explain why I feel like investing in IPOs in favorable conditions is very risky. So as you can see, that's what happened. The shares were down 23%, but they are still up 8.6%. So naturally, it did bounce back when the initial correction happens and people sell to get that profit in the initial IPO. Of course, if the company has value and they do report positive earnings reports like Coupang did, then they're going to show some retracement, but not necessarily to the amounts pre-IPO, like the 23% higher amount. So another reason the share price fell for Coupang, which is why it made it very cheap for the Bill Gates Trust to go in and buy it at this good price, is that Coupang announced an early expiration to the so-called lockup period. So it allowed employees to sell stock. So imagine they're not allowed to sell their stock until a specific date, and then they announce an early expiration date. So the employees are like, well, we have this much stock, let's sell, let's make money, right? So naturally the share price will fall even more. And Coupang stock also rewarded early investors SoftBank, so they did get to see those rewards as well. So I definitely think the rationale behind this equity story and why it would be a good investment makes sense. But this was also supported by their fantastic positive earnings reports that we saw. So let's go into that. By the way, the current share price for Coupang is $39.11, and the earnings report showed a 74% increase in net revenues. I'm sorry, but that's insane. That's really good. By the way, this is not a Coupang ad or anything. I'm literally trying to just see why the Bill Gates Trust bought into it and whether it could be a investment for myself to consider. So yes, the revenues increased by 73% and the gross profit is up to 732.5 million, which is a 70% increase from the previous year, which was 430 million. However, guys, there was a net loss and the adjusted EBITDA is also negative of around 132 million. But remember, when Amazon started, they did actually operate at a loss as well. Many times these companies are focusing on investing back into R&D and building that customer awareness, that brand, that loyalty, rather than focusing on the profits in the short term. But in the long term, usually what they focus on ends up reaping them the rewards later. And I think perhaps Bill Gates Trust did see that potential. Now let's have a look at the company's balance sheet. Now, in case you guys don't know, a balance sheet essentially is a snapshot of a company's financial health, you could say, in one point of time. Whereas an income statement, which we'll look at after, is a flow. It's sort of what's going in and coming out. So they've actually got 4.3 billion in cash. Am I reading that right? It's in thousands and it's in dollars. Yeah. So if you add in 3 extra zeros because it's in thousands, that makes it 4 billion, 4.3 billion. Very high and very and a nice, healthy, large and a nice increase from what it was in December 2020. And this is just the quarterly change. So, and their total assets is around 8.6 billion, very, very high. And they've got their, let's look at their debt, because it's important to look at a company's debt because they need to be able to pay off their obligations in a scenario where maybe they had a bad year, their revenue was low. They need to be able to have assets that can be sort of liquidated in the event that they need to pay off the debt. Always remember that when a company goes bankrupt or it has obligations, it always pays off the debt holders first in order of seniority and then the equity holders. So shareholders are last. There will be even different levels of layers of which ones they need to pay off first and like which ones last. But the equity holders, so the shareholders like you and I who are maybe buying the shares, will be last. So just bear that in mind. Anyway, so that's why I look at the debt. So let's look at their short-term debt. So they've got short-term borrowings, about 154 million, and long-term debt, which is 273.8 million. Again, not terribly high, especially given they've got an asset base of like 8.6 billion and a cash base of 4.3 billion. It's looking very healthy, like in, to pay off the interest of their debt per, maybe month or per quarter, whenever the interest is due. They would have enough of a cash buffer to be able to pay that off. So nothing worrisome there. So I am going to go on investing.com, which has luckily calculated some of these ratios for me. Usually at work, I build a financial model and I plug in all the financials of that company and build these ratios out myself. But for time, I'm going to use these. So the gross margin, according to investing.com, is 42.51%. So just in case you don't know, gross margin is the amount of profit they make. So the gross profit, so literally the revenue minus cost of sales above divided by the revenue. So how much of a percentage of revenue are they making a profit? So 42.51% is a very, very high gross margin. On online companies, usually it's a lot lower than that because they usually buy the goods and the cost of sales are so high to get the goods itself. Then to sell them, they have a little bit of a markup, not necessarily a 42.51% type of markup. I mean, I'm not saying that's the markup per se, but if you look at it that way, because gross profit is essentially, revenue minus cost of sales. And then we've got the basic earnings per share, which is $1.96. So pretty decent. So yeah, I mean, nothing else is jumping out. So the long-term debt to equity is 8.36%, which is not too high. And whereas their total debt to equity, which includes their short-term obligations, is 18.3%. So not too bad. Decent asset turnover rate, inventory turnover as well. I like these metrics: revenue per employee, net income per employee. Well, the output per employee is really high, which means that the company is reducing its costs in terms of hiring lots and lots of people and producing lower results per person. So that means each employee is really adding value to the company. So this article has said that eBay is going to sell the South Korean unit for about 3.6 billion to Shinsegae Naver Media. And Shinsegae Naver Media, I don't know if I'm saying it right, I apologize. So it's going to sell it to Shinsegae's group eMart and web portal operator Naver Media for about 4 trillion, which is about $3.6 billion. So this could mean that these two companies will take the eBay segment further and develop it, because right now the eBay segment is the third largest in South Korea, whereas Coupang is the largest one. So maybe this sale could mean that Naver and Shinsegae Group can take it forward and make it a much more competitive rival with Coupang. We don't know. But that also might mean that Coupang might see this as a motivation, maybe stay ahead of the game. I don't really know. But I saw some positive news where the Coupang founder drops all South Korean posts to focus on global push. So they are not only just focusing on South Korea market, but having that global push. I know I said this before, but this is kind of giving me like AliExpress, Alibaba vibes, because AliExpress, yes, is China based, but it is a global company. I mean, we can use that here. I have used that here. So this is giving me potential vibes of that. Now, you never know. Could be great for the future share price. Anyway, so I want to keep this video short. I just wanted to show you guys the rationale behind why I think the Bill Gates Trust bought Coupang and sold its Apple and Twitter shares. And also the share price is around $39.20, which is fairly stable, apart from, the initial after the IPO dip, and we saw it decline further. But when the Bill Gates Trust bought around here, that's what's caused the steady increase, as well as the earnings reports being positive. And I think this is a good entry price for an investment in this sort of firm, because it's a tech growth firm, I think it has a lot to go, especially if it has a global push and it does become like the next AliExpress or Amazon, then there could be huge returns for its share price. I just want to say I personally am going to be buying Coupang stock. I have not bought it yet, but seeing the reports and reading about it, it is one that I am bullish on. And I will be disclosing this in my Patreon as to when I will be buying, the price I will buy for, and I will let you guys know all of that. I will even include screenshots when it comes to the price I buy at for the Coupang stock. Thank you guys for watching. And if you haven't already subscribed, hit that subscribe button down below, hit that like button down below, and also check my Patreon account where you can see the trades and investments I make in real time. And also you will get a lot of one-on-one support from me depending on the tier you select. I also have a link down below where you can buy stocks like Coupang on WEBULL, where you can deposit your first $100 and get 2 free stocks worth up to, I think it's now $2,000. It was like $1,600. It's around that level. Either way, it's a fantastic deal. So check that out. Check my link in the bio, and I look forward to seeing you guys in my next video. Thank you guys for watching. Bye.